The rent paid on business property used in a trade or business activity. Pretty straightforward. However, you cannot deduct rent for a dwelling unit occupied by a shareholder for personal use. That's a clear line.
No personal use rent. Okay.
A specific quirk many don't realize is related to leased vehicles. If your S corporation leases a vehicle for 30 days or more and its fair market value on the first day of the lease exceeds certain thresholds, for example, $62,000 for cars, trucks, or vans leased after December 31st, 2023, but before January 1st, 2025.
High value leases.
Right. The deduction for lease expense may need to be reduced by an inclusion amount in gross income. This isn't a deduction, but an adjustment. And understanding this inclusion amount is vital for accurately calculating the actual deductible rent expense for those vehicles.
And what about taxes and interest expense? Are there any notable deductions or limitations there that can impact a business's tax bill?
For taxes and licenses, you could deduct those paid or incurred in the corporation's trade or business activities, such as federal import duties and federal excise and stamp taxes. Pretty standard. Interest expense gets a bit more complex. It's generally allocated by tracing the debt proceeds to specific expenditures. Prepaid interest, for instance, can generally only be deducted over the term of the debt, not all at once.
No accelerating that deduction.
Generally not. Now, there's a significant limitation that applies to many businesses, called the Business Interest Expense Limitation, Section 163J.
Okay, what's the limit?
Generally, business interest expense is limited to the sum of your business interest income, 30% of your adjusted taxable income, and any floor plan financing interest. This limitation applies at the S corporation level, and any excess interest expense that can't be deducted carries over to future years.
Carries over, okay. But does it apply to everyone?
Good question. Here's another crucial advantage for small businesses. A small business taxpayer, meeting that $30 million average annual gross receipts test and not a tax shelter, is not subject to this limitation.
There it is again. So small S corp don't have this interest limit.
Correct. This means your small S corporation is not required to file Form 8990, the form used to calculate this limitation. This is a huge financial relief for smaller S corporations, allowing them to deduct all their qualified business interest expense without limitation. This directly impacts their bottom line and helps them manage their debt costs more effectively.
That's excellent news for smaller entities, removing a significant hurdle for deducting interest. What about other deductions and, just as importantly, the items that are not deductible? I imagine there are many hidden traps for the unwary there.
You're right, line 20 covers other deductions,
Mm-hmm.
but understanding what you cannot deduct is just as vital for compliance and avoiding costly mistakes. Let's walk through some key non-deductible items and their surprising exceptions, which can often turn into overlooked opportunities to save money.
Okay, let's hear them.